Greetings of the day. A warm welcome to all the students in the next lecture in the series. We have begun with another important topic from your Unit 2, that is financial analysis. Unit 2 we have already discussed is divided into 3 parts, and we are studying the first part of financial analysis. Under this first part of financial analysis, today we are about to study a very important topic which would actually build the parts for your upcoming lecture. And the topic today is the tools that we have to perform this financial analysis. In the previous lecture, we have studied that how the analysis of financial statements help the organization to check out the position and to compare with oneself and with the others in the industry, and how to improve one's level. For that, you studied that we need certain tools to perform such analysis. And here we have the 5 basic categories that are a part of your syllabus. So in the analysis of financial statements, an analyst has certain tools that he would choose as per the best requirement that he's having, like as per the specific purpose for which he is being choosing that particular tool. Depends on the situation and the purpose for which he will choose the various tools. Here I have named 5 tools basically: comparative financial statements, common size financial statements, trend percentages, financial ratio analysis, funds flow and cash flow analysis. Before going further, you must understand that the first 3 topics, numericals, have not appeared in the past. Numericals are there in these particular topics. We can calculate and perform. I will teach you also to be on a safer side, so that if it appears in exam, you may perform it. But as per the analysis that I have performed on the previous year's papers, I have not seen any numerical from these first three topics. For sure, you will have a numerical question from ratio analysis. It can be a full-fledged numerical question of 15 marks. It can be theoretical question as well. So we need to prepare for ratio analysis full-fledgedly. And I would let you know that funds flow analysis is not a part of your syllabus. It is just as a tool. I have mentioned it here. So you just need to understand this particular tool just by its definition. Some of you might have studied funds flow statement and cash flow statements in your class 11 or 12. Ratio analysis even you have studied there out. But funds flow statement is not actually a part of your syllabus. Means the detailed funds flow statement where you will be preparing or constructing funds flow statement is not a part from your syllabus. It was a syllabus. It was there in the syllabus till 2017, and now it has been removed. But cash flow analysis is a part of your syllabus and you will be studying. And you can expect a numerical question from this part as well. So out of these 5 tools, we will be studying these 3 topics in bit like shorter manner and brief, because not many questions have actually appeared from these 2 parts, but there you can find a overall question on tools of financial analysis. There you need to explain all of these 5. So for that purpose, you need to know all of them, but we will move as per the requirement. Like the first 3 we will be studying in brief, then ratio analysis in detail with numericals, then funds flow just by definition, and cash flow analysis in detail with numericals. Okay, let's move further. Comparative financial statements. The first tool we are about to study is comparative financial statements. See, these are the complete set of financial statements that an entity issues, revealing the information for more than one reporting period. As the term comparative is there added up with this particular tool, from there only you understand that we compare the financial statements, and they are an important tool of horizontal analysis. If you remember the types of analysis that I taught you, vertical and horizontal analysis, in the previous video lecture, then it would be easy for you to understand the terms here. The financial statements that may be compared using this tool can be income statement, balance sheet, or the statement of cash flows. Income statement showing the results from multiple periods, balance sheets showing the financial position of the entity as of more than one balance sheet date, the statement of cash flow, same ways that it can even be for more than one particular period. I have taken a question here out for you. From this following information, you need to prepare a comparative balance sheet. You can see the question. I have given you four liabilities only for this particular year ending 31st March 2019. All five values are given to you, and the total of liabilities is also given to you as 8,62,000. Same ways I have given five assets also, and their total is given to you. Right? This is the balance sheet of the year 2019 given to us in the question. And then similarly, because we need to prepare a comparative balance sheet, so we would need data of more than 1 year. The data for the current year 31st March 2020 is given to us. The assets and liabilities are given to us. Okay. Now let us see how to prepare a comparative balance sheet. Not very difficult, it is actually quite easy. See what I have done here while preparing comparative balance sheet. This is just that I have taken from the question. I've just copied the amounts of assets and liabilities here. All the assets and liabilities are amounted the same way as they were in the question. This is the part that you need to work upon, where you are comparing the two things. Now let us see how to do this part, how to perform the analysis. Increase or decrease we are finding out, and in this column, this particular column, we are finding out absolute increase or decrease in rupees. You can see some amounts are in negative also, some are like decreased also, and then we are calculating the percentage thereof. Now let us see how we are checking out. See, this is the year 2019 and this is 2020. Here the equity share capital was 4 lakh and here it got increased to 6 lakh. So for that reason you are able to see the absolute difference of 2 lakh rupees. Same ways debentures were for 2 lakh and now it has got increased to 3 lakh 25,000. So there is an absolute increase of 1 lakh 25,000. Sundry creditors had got decreased. They were 2,55,000 before and now it is 1,17,000. So it has got decreased by 1,38,000. Bank overdraft was 7,000 and now it is 10,000. So you do have an absolute increase of 3,000. So same ways your assets are being calculated. Plant and machinery was there for 1 lakh rupees. Now it is for 2 lakh rupees. So there is an absolute increase of 1 lakh. Land and building was for 3,60,000 and now it is for 5,40,000. So there is an absolute increase of 1,80,000. Investments had got decreased by 1 lakh rupees. We can see it was 2,70,000 before and now it is 1,70,000 only. Sundry debtors has also got decreased. It was 1 lakh before and now it is 88,000. So for that reason you can see minus 12,000 here. Cash in hand got increased by rupees 22,000. So these are the terms of increase and decrease, amounts of increase and decrease in absolute terms. And here I have just calculated the percentage to signify, because percentages signify the things in a better manner. The 50% increase was there in the capital. How have I calculated this 50%? I have taken this absolute amount, multiplied it by 100 and taken this 2019 amounts as base. Simply the percentages are calculated from here, from the absolute terms, and taking 2019 as base and the denominator. Quite simple, right? So it is not at all difficult, I suppose, because you know if you are having balance sheet, you just need to check out whether the assets and liabilities have got increased or decreased, and accordingly you need to calculate the percentage increase and decrease, and you are able to obtain a comparative balance sheet. Okay, let's move further. This was the first tool, and now the second tool is common size financial statement. Names may appear same, but it is not actually same. That is comparative financial statement, where you compare 2 years, and it is common size financial statement. This displays the item as a percentage of a common base figure. For example, we can take base as anything, like we can take total sales revenue as base. We can take any other item as base. So with that particular base, percentages are calculated and then comparisons are made and analysis is performed. This type of financial statement allows for easy analysis between the companies, between the periods for the same company as well. Means you can perform inter-company or intra-company analysis as well. However, if the companies use different accounting methods, then comparison would not be that accurate. So companies need to opt the same accounting methods over the period of time. A common size financial statement displays the entries as a percentage of common base figure. Here also we calculate percentages, but here we calculate it as a percentage of that particular base figure that we consider. Like I told you here, it can be anything that we decide upon. They let analysts compare the companies of different sizes. Means you can compare the data of a big company with a small company or a medium company in different industries or even across time uh, in an apples to apples way. Means it in a very easy way it can be calculated. Though if you perform any analysis of companies having a turnover difference from a large scale to small scale, it becomes very difficult to calculate this, but this tool actually facilitates the financial analysis among the big companies as well. Common size financial statements commonly include the income statement, balance sheet and cash flow statement only. Let's move further. Here also I have taken a question for you. That same question has been considered. Same ways we have taken those four same liabilities and the same amount of assets. That same question has been taken. There we prepared comparative balance sheet and now we are about to prepare common size balance sheet. I have purposely taken the same question so that you can see that what is the basic difference. Now let us see how we draw or construct a common size balance sheet. See, here is the data of 2019. I have taken the amounts here out and here the base has been taken as total. This total means when I have calculated this 46.4, I have calculated it using 4 lakh, keeping this total as base. Okay. Same ways, we are moving towards liabilities. While we are calculating this for 1 lakh, how I have calculated this percentage, because I have taken total as the base, so total liability, total assets as the base. So when this 1 lakh rupees of plant and assets we are calculating into percentage, how have I calculated it? It is 1 lakh multiplied by 100, taking this 8,62,000 as base, and this amount of percentage is calculated. It is not at all difficult actually, we need to calculate the percentages. Keeping one as a base, one amount as a base, it could have been the total, it could have been the capital, it could have been the assets, current or fixed, depending on the requirement the analyst needs to perform. What he wants to know is more important to check out this base. This base can be decided only when you have the requirement that for what purpose you need to perform the analysis. Here I have taken total because I just need to see the overall performance of that particular company in a particular year regarding the assets and the liabilities. Now let us see for 2020, the next year. Here also we have performed the analysis. Same ways, let me tell you how I have calculated this 57.03%. I have taken 6 lakh equity share of that particular year only, multiplied it by 100 and then divided by the total, that is 10,52,000, and this comes out. I have taken these amounts up to 2 decimal places only, because the amounts are basically signifying money and percentages are calculated for that purpose only, to 2 decimal places only. Same ways for assets we have calculated. For plant and machinery it is 2 lakh into 100 divided by 10,52,000. So this is the way that how we calculate the common size balance sheet. If you see, we have calculated for a particular year and we are not calculating the differences. There in comparative balance sheet we calculated the percentages out of the difference, that how it increased. Like there it was like 4 lakh, now got increased to 2 lakh, got increased by 2 lakh and become 6 lakh. So we calculated the percentages out of the difference, but here individually we are calculating. Here we can see that 46.4% was your equity share capital, but here in this year 57% was your share capital. It has got increased over the period of time. So analysis is different, the way of calculation is different, and it is being decided, like which method to opt is decided by the requirement of the analyst, that what he actually wants to analyze. The third in the series is trend percentages. We will be studying these first three only in this particular video lecture. Reason for that, because ratio analysis is a long lengthy topic, because we will be studying all types of ratios in the upcoming lectures with their numericals. I will try as much as I can. I can conclude in this particular video lectures. Rest we will be studying in our live lectures. For the cash flow analysis also the same ways, and for funds flow we just need to see the definition. So this is the third and last for this particular lecture. Now let us see trend percentages. As you can see the name, here also you need to calculate the percentages only. So they are similar to horizontal analysis, except that comparisons are to be made to a selected base year or a period. Here you take a particular year as a base year. You will be able to see that in the numerical that I've given in the next slides. The trend percentages are useful for comparing the financial statements over several years, because they disclose the changes, the trends occurring through time. So they also referred to as an index numbers and help you to compare the financial statements over time to a particular base year or a period that you have considered. So we can calculate trend percentages by, first of all, we select a base year or a period, then we assign 100% weightage to that particular year, to the amount which are appearing on the base year financial statements, and then we express the corresponding amounts on the other year's financial statements as a percentage of base year or period amounts. Then we compute the percentages of analysis year amount or that base year amount, and then multiply the result by 100 to get a percentage. This can be easily understood by the next slide. Let us see certain benefits, then we will move towards the numerical. Trend percentages benefits I have mentioned here, that this is of immense use in making a comparative analysis over a number of years if a company wants to perform such analysis, and it is easy to identify the changes and interpret the same, because percentage figures disclose more than the absolute figures. That tells you more of the inner stories as compared to the absolute figures. Let us see, here is a question. From this given information, we need to interpret the results of the operations of manufacturing concern using trend ratios. And it is given in the question that we need to use 2017 as a base. In all, you can see the net sales of 4 years are given to us, 2017, 18, 19 and 20. Net sales are given to us. Cost of goods sold is given to us, gross profit is given to us, operating expenses is given to us, net operating profit is also given to us. And all these amounts that are mentioned here are in rupee lakhs for the year ended are given. Okay, now let us see how to calculate. See, 2017 is taken as a base. For that reason, we have converted it into 100. Now we will be calculating the percentages. How this has got 95. Now let us see how this has got 95. You can see this is the first one and can be easily done. Now let us have a look to this. 58 into 100 divided by 60. Because the base here was 100, for that reason the first is same, because net sales is by chance 100. If it not had been 100, then this amount would also be different. Okay, there you can see that it is 95. No, so it is 95 just because the net sales were 100 only by chance. For that reason it is coming out. How we have calculated it? 95 divided by 100, multiplied by 100 and divided by 100 only. For that reason it is coming out to be 100. So for the next amount you can see 58 into 100 divided by 60. That would come out somewhere around 96.67. For the next it is like 36.1 into 100 divided by 40. Then 9.7 into 100 divided by 10. This is the analysis for 2018. When we would move towards 2019, we would use the same 120 into 100 divided by 100. 69.6 into 100 divided by the base year 60. 50.4 into 100 divided by the base year 40. So this ways only I have calculated all these percentages for your reference. You can see and calculate and practice it. If you face any problem, you can write a mail to me. So I'm ending up your this lecture here only. If you see, the first three tools I have explained here, the next two tools, that is your ratio analysis and cash flow analysis, will be the part of your next upcoming lectures. And if I talk about funds flow statement, you know very well that funds flows are related to the changes in the working capital. Working capital, you people know very well. You have studied that in the previous two semesters with us, and now we are having uh, the further upcoming advanced levels of that. So funds flow statements deals with the statement of changes in working capital. That's the only basic purpose of constructing the funds flow statements. So the last two topics, that is your ratio analysis and cash flow analysis, will be started up in the next upcoming lectures. Till then, take care, study well, stay home. Thank you.